Welcome back, G-Traders. Here is a red-hot review of the US markets for Tuesday. Wall Street is reopening after a long weekend with a cautious optimism. The pre-market suggests growth in the stock market later today. The benchmark stock indexes are poised to open a new trading week with gains. They are trading in the green in the New York pre-market. Futures on the Dow Jones edged up 0.28%, the Nasdaq rose 0.23%, and the S&P500 climbed 0.58%. The index is expected to trade in the corridor between 3,860 and 3,980 points. While the US markets were shut for the public holiday yesterday, the market boost happened in the European markets, the currency and commodity markets. Despite the gas crisis hanging over the eurozone, the volatile markets closed on a Monday without notable changes in quotes. European gas contracts did not spike to the peak values of the last months, despite Moscow's dodgy policy. Gas prices have retreated following yesterday's surge, and the Dutch benchmark gas futures have declined almost 30% for the last 2 weeks. Likewise, crude prices did not develop really even in the light of OPEC Plus decision on the modest cuts in oil output, so oil prices are still 25% lower than the peak values in the middle of the year. These factors calm down market jitters. Wall Street is no exception. The major stock indexes traded higher in the American pre-market. No Fed's policymakers will make comments today. In the early New York session, investors will digest a fresh U.S. services PMI for August and the ISM non-manufacturing PMI. As of today, traders reckon there is a 70% chance of a rate hike by 75 basis points at the Fed's policy meeting in September. And this week, the ECB and the Bank of Canada are due to make their policy decisions. Stocks of the top US companies such as Apple, Tesla, Microsoft, Amazon and Meta traded with gains before the opening bell. Shares of Bed Bath & Beyond fell 13.3% after the news that Gustavo Arnold, chief financial officer of the retailer, fell from a skyscraper in New York. The policy confirmed it was a suicide. Shares of a Digital World Acquisition Corp tumbled to 21.7%, and the blank check firm had agreed to merge with Donald Trump's social media company, but it failed to get enough support for an extension to complete the deal. Meanwhile, the US dollar index consolidated at around 109.50, but it again headed to 110.30, the strongest level in the last 20 years. By the moment of recording this video, the index reached 110.20, having added 0.55%. The intraday corridor for the index is seen between 109.40 and 110.70. The greenback still owes its strength to global headwinds. The US dollar printed a fresh 24-year peak against the yen at 142.39, having advanced 1.45% on Tuesday alone. The Australian dollar fell to the weakest level since July against its American rival after the Reserve Bank of Australia raised the cash rate by 50 basis points. The euro and the pound sterling traded steadily most Tuesday, but they traded lower in the New York pre-market. The single European currency again dipped below 99 cents versus the dollar, and the sterling shot 0.12% to the lowest level since 1985. Such developments on forex are due to obscure economic prospects, sky-high electricity bills, and a soaring inflation that make a dent in the purchasing activity in the UK and Europe. Investors are betting on a jumbo rate hike by 75 basis points by the ECB on Thursday and by the Bank of England later on. The US dollar is flexing its muscles thanks to the hawkish Federal Reserve and its safe haven status. The Canadian dollar is gaining ground against its American peer today. The USD CAD pay is trading today at about 1.3126 within an intraday corridor between 1.3090 and 1.3200. The loonie is holding the upper hand over the greenback in anticipation of the Bank of Canada's policy meeting. On Wednesday, the regulator will unveil its policy update. Another sharp rate hike is in the cards because the central bank aims to curb rapid inflation. Bank of Canada Chief McLam sent a message that the regulator is determined to notch the upper threshold of the key interest rate at 3% or perhaps higher. In this context, analysts project a rate hike by 0.75% that will push the target overnight rate up to 3 and 25%. As for the commodity market that feeds the loonie, oil prices are going down today. New coronavirus restrictions in China roused fears that soaring inflation and the tighter financial conditions will disrupt global oil demand. Brent crude lost 1.96% to trade at $93.81 a barrel, the lowest level since February, and WTI futures slipped 1.72%. Bitcoin has been locked inside a narrow range between $19,600 and $20,100. The crypto was rising in confidence for the most of the day and climbed to 20,000, but it dipped again to $19,800 in the New York pre-market. Analysts say that the token is trading lower under weak volatility today. CoinGlass estimates that Bitcoin's 30-day average volatility dropped to 2.7% from almost 4% in early July. The score remains below 5% even in a rough month of the crypto winter in 2022. Notably, Ethereum is in favor with the investors in developing a steady rally. The intraday forecast for Bitcoin remains the same. The token could either decline to $19,500 and deeper to $19,200 or try to recover above $20,000. And let me remind you that market sentiment could change following the fresh economic data on a US business activity. Trade prudently with the InstaForex and see you tomorrow.